And we're live.
We are. Coronavirus. I just binged about 7 hours of coronavirus research last night. I think I found the end of the internet when it comes to coronavirus information and rumors and studies and scientists on Twitter. How about you guys?
I don't think I reached the end of the internet, but I've read quite a bit, and I think you and I might have slightly differing opinions on what to do with our portfolio. So I think this will be an interesting discussion today.
Yeah, I'm not so sure. Like, I've been thinking about this a lot because every year it seems like we have one or two events that seem like they could be the event, right, to take down the market. And our gut reaction is, how do we protect our portfolio? And the truth is, nearly every time we thought one of those events would happen, for the most part, they haven't happened. They haven't unraveled in that way. But, you know, if we go back to one of my favorite books, Nassim Taleb's Black Swan, it's really just a matter of when, not if, right? So we've gotten lucky in the past, even if you go back to the SARS, pandemic of 2003, we got out of that one pretty well globally in terms of financial markets. We rebounded. We basically rebounded from every single flu epidemic, every bird flu, any type of pandemic. The market's always rebounded. So I think, Dave, let me guess, you're coming at this from the perspective of just don't even worry about it, right? Just stay put and don't think about it. Is that your deal?
I mean, yeah, that is essentially where I'm coming from. And not so much a don't worry about it, but don't panic sell. I don't think this is the time to, see that one of your stocks is down 7-10% and this is time to sell. You're just going to create a big tax liability for yourself because you sold something that you've probably been in for a while and is probably profitable. So I'm not selling anything. And I have considered maybe buying something to hedge, but I haven't done it yet.
Okay, so here's the thing. I think you nailed it on the head. I mean, the most important thing is taxes, right? Like you don't want to get out of long-term holdings because it will really mess up your long-term gains and impact your tax rate. So there are other ways to hedge your portfolio. But more than that, I think we're all trying to figure out, what is coronavirus? How big of a deal is it? Is this just like a lesser form of the common flu and it's just mass hysteria and the media blowing this thing up? Or is this potentially something way bigger that could be a pandemic, that could send the markets into turmoil, that could be the Black Swan event or something even close to it, that even if temporarily could impact your entire portfolio and 20, 30, 40, 50%? Is that a possibility? And I think that's the question I've been trying to answer. And to understand that question and the answer to it, you have to cut through the noise, right? And I've come to one conclusion with all my research, and that conclusion is that there are really primarily two things that we need to know about coronavirus to understand the extent of how bad it can be on world financial markets. The first thing is the degree to which people can transmit the virus and be contagious without showing symptoms. The second is the rate of infection, right? The rate of infection, if you think about the common flu, it's like 1.2, meaning that for every person that gets the flu, they transmit it. It's a 1.2 transference to other people, right? I think the worst flu in history, going way back, the bad one, Dave, you know,
bird flu?
No, not that part. No, the Spanish flu, Spanish flu, the real bad one. I think that was just above 2. So the one, what I've come to learn is that as of this moment in time, what's today's date? January 28th, 10:13 Central. We do not have the answer definitively to either of those two questions, right? And to me, that's all that really matters, because no matter how much research you do, those questions have not been answered. And until those two questions are answered, we have no idea if this is something that will dissipate pretty quickly, or if this is something that will turn into a mega black swan event for financial markets and the world economy. So if you want to dig into those two questions a little further, there are a lot of opinions out there. I don't know if you guys have read them, saying that the rate of infection, I've read stuff from legit scientists who are theorizing that it could be as high as 2 to maybe even 2.5, which would put it right up there with the Spanish flu, which would just be absolutely insane. And I've also heard people speculating that it could be contagious without showing symptoms. If both of those things were correct, and I'm not saying they are, but if that were the case, this could be catastrophic. Now, I'm not saying it is, but it could be. And we need to find the answer to those two questions. So when you ask me what I'm doing to continue my research, like every hour to hour and a half, the things I'm checking on Twitter, the things I'm looking for in the news cycle, I'm just looking for the answer to those two questions. I'm funneling out all the other noise, right? I don't care about any videos people are throwing up there or people passing out at casinos that might be true or might be from 10 years ago. Like, I just want to know about those two questions, because the answer to those two questions will determine the degree, not to which I will sell off my portfolio, but the degree to which I'll hedge my portfolio. And I have a few stock ideas, a few trade ideas for how I'm planning to hedge my portfolio. And I already have to a small extent. We could talk about that. But what are your guys' thoughts on that?
I just think that this is a little bit different because we have so limited access to information. The things that we do see coming through on Twitter and like you say, these videos of like sensational things that may or may not even be real. It makes this different because the access to information is more limited, and I think we saw that yesterday morning when the stock market just fell apart, and then I think people had a little time to think about it overnight and realized that, well, maybe it's not the end of the world, and the market's coming back a little bit today.
Yeah, but you say access to information is limited, and it is. But what's really interesting, and why I have an interest in this potential hedge or trade or getting in front of this, is because that information is pretty evenly distributed to markets and to regular people like us, right? So we really have access, if you're checking frequently and looking and following the right scientists and following the right accounts, you have the ability to get this information in next to real time along with the largest funds in the world, if you know where to look and what to look for. So to me, that's really interesting because we're all kind of in the same boat. We're all working off limited information coming out of China, right? And what's really cool about this, it's scientists around the world that are pulling the information that is available and extrapolating that and coming out with their own opinions. And it's interesting that we can see that stuff in real time right on Twitter. I don't know if you saw that guy's account that I texted you last night. It's a really interesting Twitter account. Let me pull it up here. This guy is at, where are we? Whoa, is that right? DRERICDING. So it's at
Eric Ding.
It's Dr. Eric Ding, basically. So DR, then Eric, then Ding. Did you check out that account?
Yeah.
Any thoughts, Jordan?
But Jordan, what did you say?
Yeah, I mean, I think that there's a lot that we don't know right now, and people are speculating on what's R not going to be, what's the death rate going to be, all these things, and we really don't know. And I don't think we'll know for probably a couple of weeks. So I think we saw an initial dip in the market yesterday from a fear, a little bit of a pullback or a little bit of a bounce back today, but I don't really expect us to know, the full extent of this for weeks. So my thought is that I'm going to be patient with this thing and watch it play out. I'm not fully invested, and so I'm not looking to make any sort of, hedging bets, but I am looking for pullback opportunities to buy.
Yeah, and we could talk about that as well. I think the thing that is most concerning, let me know if you agree, about this particular virus is the incubation period, right? So the incubation period has been stated at 10 days, with it potentially being 14 days or longer. That is just about as bad as it gets, right? So that incubation period being that long, that's where it gets really frightening if it's proven out that this virus is contagious prior to showing symptoms with a 10-day incubation period, that right there is probably the number one concern. And that's why I'm trying to answer that other question, right? And you're right, Jordan, because of that long incubation period, we really won't know. And what's really interesting is how difficult it is to test for this virus. You can't just go get a fast test for this virus at your doctor's office. Some of these countries, I think, are sending lab results to Australia to get them tested.
I will say that when I was Googling this morning, the first thing, and I switched to a webcam just to see if the audio is any better.
Way better.
Is it better?
A little better, yeah.
Okay. When I was Googling, the first thing that came up was an ad for a local ER that was advertising coronavirus testing. And I just thought we've that quickly come upon, this becoming just, it's a panic.
It's a panic right now, and I'm not concerned about that, right? So like I'm trying to cut through all the noise that's causing this panic or relief rally today. Like, because honestly, it's just noise. As Jordan just said, we really don't know. This could be not a huge deal at all, or it could be a pandemic disaster globally, and especially in China, right? We just do not know. So if you're thinking that you have information that is either putting you at ease or is making you think, oh, this is a slam dunk trade to kind of short the market, you just don't have that information as of this moment in time. And those two questions really have to be answered first. So I think what we can do as investors is understand what to look for, right? And so most of my research to date has been, what do I need to look for? Now I know what to look for. Now I understand enough about this virus and about the risk factors to understand what to look for. Now I just need to continue to look for those answers, because I don't know if they'll show up in a day, a week, 2 weeks, 3 weeks, when we'll have some confidence around those answers. Because until we get that confidence, we have no idea how big this is going to be. The second thing is, once we have the answers to those questions, what am I going to do about it, right? I have a fairly large portfolio in public markets, and how am I going to protect that portfolio? That's kind of how I'm going about this. In a minute, I'll talk about how I'm going about protecting the portfolio and how I plan to, based on new evidence that comes in over the next few days to weeks.
Yeah. So the two things that I'm looking at for all of this are, one, how is this going to change consumer behavior, right? And so we're already seeing that, flights are, not banned, but strongly discouraged to China right now, unless it's absolutely necessary. But if you get people afraid to go get their coffee, to go, buy things in China, if that spreads to the rest of the world, we could see huge issues. And then the other one is, how is this affecting manufacturing? And right now we see that it could be affecting manufacturing in China if workers are staying away from factories. And we saw that, was it GM that actually was shutting down plants or pulling people out of China just precautionarily? And so you could see a hit if that trend continues too.
Yeah, but like the reality is, we'll bounce back from all that really quick if it turns out that this virus is not that big of a deal, right? If we're not going to get the worst case scenario, because we have so many times, right, throughout the last 20 years when things like this have happened. And I think the market is always going to price in the future. So even if things are bad this week, if they're fairly confident that within a few weeks things are going to clear up and it's going to get better, I think the market will start to price that in more quickly today than ever before, because we've had so many instances where this has happened and the market has snapped back so quick. I think the general reaction is to get in front of that trade, right? But you're absolutely right. If this turns out to be really bad, what are the sectors that are going to get hit the worst? I don't think there's any reason to get creative here, right? To like try to figure out the one thing that no one else is thinking of that's going to get impacted by the coronavirus. I think you stick with the things that are so obvious that are going to get crushed so hard because it won't be debatable, right? I mean, these are things that are not going to bounce back quick, that will just get absolutely crushed if this thing turns into even something anywhere near a worst case scenario. And I have some things in mind.
And the first one you mentioned yesterday when we were at lunch was Wynn, the casino stock, because of the high percentage of their revenue that is dependent on the Chinese market?
Yes, Wynn is a stock that I have been trading since its IPO. I've had many great memories trading Wynn throughout the years. And actually, funny story, Mitch Maddox is their CEO, actually graduated with us from SMU many years ago. Went to work for Wynn and now is CEO of the company. I do not have any communication with him directly. But I do know that Wynn is so reliant on Macau. I haven't really dug into the latest numbers, but it's like between 75 and 90% of revenue, I think, comes from Macau. It's astonishing how reliant that company is on Macau. And they're trading really high, mainly because China has essentially come out and said that they're going to make Macau like a financial hub, which is huge for Macau in general and all the casino stocks out there. So, they're starting from a very high point, which means it's got a long way to fall in a worst case scenario. Just think about it, guys. I mean, you could make a case that, okay, how hard will Apple get hit if this thing gets really bad, right? Will people show up to Foxconn to manufacture iPhones? Foxconn, by the way, has come out and said that they have measures in place to ensure that they meet global demand no matter what. I don't know how that's possible. I don't know how they're going to do that.
What is their backup plan? Are
Maybe
they
they're
manufacturing in some other country?
The only thing I could think of is that they have 10,000 like full body suits prepared for their 10,000 workers to show up at work and work in isolation to get those iPhones made. I have no idea what's up their sleeve, but you can make a case that maybe they do have plans to do that. I can tell you this for sure. In anything close to a worst case scenario, there is nobody is going to be allowed to go to Macau. I just read reports this morning that the ferry services already shut down as of this morning, taking people back and forth to Macau. It's reported that this last week that traffic to Macau is down as much as 80% year over year for the first few days of the their New Year celebration there. So it's bad timing. I think you see a scenario, if it gets any worse, I think you see Macau shutting down. I think that will happen. I think people are kind of expecting that almost at this point. The question isn't whether or not Macau will shut down. It's how long will Macau be shut down for? I mean, in a situation where Macau is shut down for potentially a month or longer, forget it. I mean, I don't know how a stock like Wynn doesn't get cut in half. I honestly don't know how that doesn't happen. So to me, that is like the biggest go-to trade right now. If you start to see data or information coming out that this thing is accelerating and getting worse, as a way to hedge your portfolio without selling your portfolio, I've already purchased puts on Wynn going out a month. And I plan to purchase more if I start to see bad data. And again, this is just a hedge to help ensure or protect my portfolio at large. I'm not really trying to make profit here off of the coronavirus. I'm just trying to protect the overall value of my portfolio with a hedge against the stock I think will get hit the hardest.
And when you're hedging, what are you looking at? Are you looking at doing like a leveraged inverse S&P or something?
No, it's pretty straightforward. I purchased puts on Macau on Wynn, 120 strike price, 130 strike price. I have a combination of 120 and 130 strike price puts that are expiring in about a month. I just purchased, a decent size number. I kind of do the calculations for how far I think Wynn will drop in kind of that worst case scenario, and I calculate how much I need to make on that trade to kind of help make up for the degree to which my general portfolio will get hit in that scenario. Because I think obviously Wynn's going to get hurt worse than my portfolio at large. And I'm doing the same exact thing with Starbucks. I think Starbucks generates about 20% of the revenue from China. They're already starting to reduce store hours over there. Obviously, if we get some type of draconian measures that are put into place, which are some scientists are saying China must put those into place if it gets worse, they are going to basically lock down cities. No one will be going out to coffee shops to get their coffee. So I think Starbucks, although it's only 20% of the revenue, it's a pretty big piece of the revenue. It accounts for a much larger piece of their growth, their year-over-year growth. So Starbucks is an obvious target in terms of a company that will get hit. And listen, even while we're kind of waiting for this information to come out, you'll see today the market's recovered, but Starbucks and Wynn are up just like less than $1 each. They're right at about break even for the day.
Actually, Wynn is break even right now, and Starbucks is just barely up.
Yeah, so like I really like those two trades for me. Listen, by the way, we're not financial advisors. We're not telling you what to do. Do not mirror our trades. Everyone has a different risk tolerance, right? We don't know what your risk tolerance should be. This show's about education and entertainment and learning through us, but you need to, contact your financial advisor before you make any trades. That's not who we are. So please don't think that we're advising you on the show.
Yeah.
What do you guys think?
We also want to make sure that people know that we will be reading the comments and responding to as many as we can. And I'm apologizing for my audio. I'm just testing, and it still sounds terrible, and I'm not sure why. I've rebooted. I've done everything I could.
It's quite embarrassing for you, Dave, considering you are the.
I'm the only one who has real technology, and nothing's working today. I can't even listen to myself. I'll try to talk less and let you two kind of cover the show.
So, you listen. Those are kind of my two go-to trades. The other reason why I like them is because these are big, large cap companies. Really liquid, right? These are liquid companies. I can actually purchase options with some, liquidity in them, and I'm not concerned about getting out of those positions. So again, I don't mess with there's a bunch of people trading like these biotechs that are making, cures for the flu here, these virus companies. I'm not a virologist. Is that how you say it? I don't have the time to really dig in to understand which of those biotechs have the highest probability of coming out with a cure or whether that would be profitable. I'm not trying to think that hard about this. There are some obvious big trades here if this thing gets worse, and I'm focusing on those trades as a way to hedge my portfolio. That's simple. What do you think, Jordan?
Well, so kind of how I mentioned it earlier, I'm waiting I'm less aggressive, right? And I'm waiting for this thing to play out a little bit more. I think the market's been pretty high. I expect and I expect to be able to capitalize on that. Look for buying opportunities that are going to present themselves if this thing gets worse. I just don't think there's really, that many options for people to invest right now, and so stock markets are kind of it. You can't really make any money in buying debt right now. You can't, commodity. I mean, the only real place to make money right now is in the stock market. And so if you see a little fear, if you see a little pullback, that's where I see, maybe you can put some money to work where you haven't really had those opportunities in the past few months.
Yes, I while taking into account that this isn't going to get worse, or will it get worse? So if you start, investing money in a downdraft here, just be aware of how much worse it can get. I always tell people, right, any money that's in equities, you have to be prepared to take a 50% haircut on that. So in a black swan scenario, and again, black swan scenarios are guaranteed to happen. They will happen. It's just a matter of when they happen, right? So,
well, it's also about your time horizon, right? So what is your time horizon on those funds? And that's where we're not, like you said, we're not trying to be your financial advisor, because there are a lot of different scenarios you need to play in your head. But if you just think about stocks as the best way to create wealth that have ever happened in the world, right? Public securities, that the trend does go up. That doesn't mean that that'll happen forever. But from what we've seen, investing in the long-term play in the stock market has been kind of the best way to create wealth. And so if you can find a little pullback, if you can find a place to get in and buy, then you've got an advantage, and you can sit on those things long-term. But if that's not your horizon, then that's not.
Totally agree. But, listen, I'm an info arb trader, right? So like I have to trade information. If I think I have an edge, an information edge that allows me to see what's unfolding, that for any number of reasons the rest of the market isn't seeing as quickly as I am, and I have the ability to place a trade to monetize that edge, I'm going to do it. And while I'm prepared to take a 50% haircut on my equity position, that's just what you have to be prepared to do in any equity position. I don't want to take it, right? So if I really start to see the information that I feel is going to, signal a huge pandemic, black swan event, I'm going to double, triple, quadruple down on the trades I made on Wynn and Starbucks. I could buy some SPY puts as well. And listen, I think some comments are coming in about some other names. I've been looking into these other names. 3M, right? Johnson & Johnson, face mask, right? We have a buddy here in Dallas that works for a Chinese, we won't say who he is, but a Chinese company right here in Texas. And he's telling us a lot of his coworkers are wearing face masks, and they're actually in the business of selling face masks too. And listen, these things are selling out globally. It's insane. I mean, this has got to be one of the largest rushes for face masks that I've seen in a really long time. These N95 masks. The question is, to what degree will it move the needle for companies like 3M? And that's what you have to determine. And I'm not saying it won't move the needle. In fact, I found some reports in the past where 3M has come out and said that their earnings were positively impacted by a spike in sales of face masks. So I know that it can move the needle for them. And if this virus gets worse, it would be a positive for 3M, but not to the degree that it would be a negative for companies like Wynn and Starbucks. So I'm not going to trade 3M based on this event.
Yeah, 3M and Johnson, those are enormous companies that generate revenue from so many different product lines that any of these little single small things are going to be a blip in the radar for their earnings.
What about hand sanitizer companies? Do we have any idea if hand sanitizers help with the virus?
Right.
But again, of course they do. It's like washing your hands. But again, it's like, how much more? I mean, you're right. I mean, there will be a pop from that. I'm not saying that I don't even know if there's a hand sanitizer company that's publicly traded, quite honestly, that's a single-minded company around hand sanitizer. And if there is, it's probably a good trade. Listen, Disney's another one. Disney's already shut down, Disney China, I think, right? That's a negative for Disney, for sure. But the degree to which Disney China impacts Disney's bottom line relative to its overall business, I mean, compared to how Macau is impacting Wynn's business, there's just no comparison. So it's not that Disney wouldn't be negatively impacted. It's that, can I find something better? And that's why I'm kind of all in on this Wynn trade and potentially Las Vegas Sands as well, versus a Disney short position, because there are things that could happen at Disney that could outweigh the negative that they see from closing down their park in China. Now, if it turns into a global pandemic and Disney parks in the U.S. start seeing a massive decrease in traffic, that would be a much bigger deal for Disney, no doubt.
Just generally, I see Epic Score says if you have great companies, don't sell. This is the time to buy on lows, which we talked about that a little bit. I think that this, for me, is going to be kind of an opportunity to look at companies that I wanted to be in. I mean, it's not like they dropped enough to really make a difference. I mean, if I could pick up a little bit more Apple because people are freaked out, I know that long term this isn't going to damage Apple. It might have an impact on a quarter or two, but Apple's still a company that I would love to be in for the rest of my life.
Agreed. And by the way, someone commented, and I saw this earlier, 3M, I think, is down 6% today. I want to say they might have had earnings. But again, this is just one of those scenarios where you think 3M would go up, but there are other things happening at the company that are potentially much larger than this event. Luckin Coffee, they're the Starbucks of China. Why did I not short Luckin? Well, I don't think I can't buy derivatives in Luckin Coffee. I can't buy put options. And that's why I'm not trading Luckin. I'm trading Starbucks instead. Otherwise, I would definitely be shorting Luckin Coffee for sure. One person just said 2,700 people have been infected, but that the rate of infection will be reduced if WHO directs the correct quarantine measures. By the way, I totally agree with that. There's no doubt that with proper quarantine, like a 90% quarantine, draconian measures, that is absolutely going to help this. And those are things that we have to just look out for. But if that quarantine happens in China, that's going to massively impact people going to Macau, right? It's going to massively impact people going to Starbucks in China. So that's kind of part of this. Yes, it'd be great for society and people not contracting the virus, but still really bad for business in China.
Yeah.
Any stocks that if they fall just as part of a broad fall here that you guys would be really excited about?
Well, that's what I was going to ask. So what, are we too late? We saw the big fall yesterday. I mean, it wasn't huge, right? But, a few hundred
It
points.
wasn't big enough to make me want to go buy
But
stocks.
should we have, well, yeah, for the buy case, maybe not. But what I'm saying is, for the short position or for the, trading options, should we have done that Friday, right? Do you think there's still opportunity left?
Well, I can't answer that question because there's only opportunity left if based on the information that's coming in, right? Like I said, we don't know yet. Like, I don't want to sit here and say, this is the trade, like this is what's going to happen to the market. The information the questions I need answered, nobody in the world, maybe outside of China that's not disclosing this, no one has been able to answer those two questions. And until those two questions are answered, I am not heavily trading anything related to this. So my strategy here is to closely monitor social feeds, closely monitor the scientists and the organizations that are tracking this thing. And when I start to get more transparency around the answers to those questions, that's when I'll start to place these trades. And yeah, in the event that this turns into a global pandemic and it's a disaster, yeah, there's plenty of time to trade. There's no doubt you'll see the market turn over 10x what it has so far. Someone I think just said that Starbucks I think has earnings that might be today. I think it's today. Yeah, so that's a little bit of a risk factor there, right? So, another reason why I wouldn't want to go in heavy on a Starbucks hedge, right? Earnings are coming out today. They could blow out earnings this afternoon that have nothing to do with China. Nothing to do with this virus. And if that's the case, you could see a pop in Starbucks tomorrow. And that would mean that, using Starbucks as a hedge here, it's a very small hedge for me. I'm not super concerned right now, but I wouldn't put a lot of money in a Starbucks hedge right before announcing earnings because there's something else happening that could be more meaningful than the information driver that you're relying on for that hedge. So that's really important to understand. Also, Wynn Casinos is also coming out with earnings this week, which is why my hedge on Wynn is really relatively light right now. And I'm trying to be careful not hedging too much prior to that earnings announcement because they could have had a blowout quarter that could temporarily pop that stock up. So I think once we get through this earnings period, the next 1 or 2 days, with some of these big hedge stocks for this virus, I think it will be a little bit safer using those stocks to hedge with.
Would you
Let's talk
consider
about
gold or physical gold or the GLD?
Man, I listen. Yeah, in any type of global catastrophe, gold generally trends up. I'm not saying that gold is a bad hedge. I just don't think it's the best hedge for me, right? So for me, a couple stocks, and there's a handful more that I think are the most ideal companies to hedge, right? Because I want to maximize the return on that hedge investment that I'll be making. And that's really what this is all about. Like if I decide to put on a big hedge, what is the best way to do it, right? There are a lot of ways to do it, but what is the best?
So you've talked before about using some of the upcoming earnings to try to predict what's going to happen, right? So we can use maybe Apple's earnings that happened today to figure out, are they going to mention, any guidance, if we're coming up with this, right? And then same thing with Wynn. So if Wynn had a blowout, let's say they had a blowout earnings, but then they start to lower guidance because they know they're going to have to close down their casinos for a while. Maybe that's a good indicator to look at. But then again, by then
it can go the other way. So like, again, you're trading information that you don't have yet. Like I like trading information I have. Now that said, there's been some kind of buzz about Wynn and I think Sands not pre-releasing any information related to this Macau situation, which could be seen as a negative. Why have they not released anything yet? Why have they not come out to calm investors to say, hey, we'll be okay? Like, is that a negative in and within itself? Or are they just waiting for earnings to come out in the next day or two to kind of have that conversation?
It's too early for them to even know if it's going to have an impact, like nobody knows where this virus is going or how big it's going to be or how much it's going to impact everyday life in China, or if it hits other countries and starts to affect Other markets,
Correct. So it's all about risk reward. And again, when I'm looking at the lowest hanging fruit, the most obvious trade, I just can't stop thinking about Macau. And like, if there's one thing that you're not going to do during a pandemic, it's fly across China to a crowded casino, right? Don't worry about that because they won't be open for you to go to. But it's the one thing that the government would not even allow to happen. So it just seems like such a slam dunk, and the kind of contrarian thought to that trade is that the future seems so bright for some of these casino stocks, especially with China coming out and saying, "Hey, we want Macau to be a financial hub, and we're going to, basically make that happen." That really was a big part of why these casino stocks have been on fire the past few months. That everyone's like, I want to own this long term, right? I want to own it long term. So while on one hand it's a catastrophe for the casino stocks in Macau, on the other hand, in the event that this thing starts to dissipate and turns around in a positive way, you are going to see a massive rush back into those casino stocks, right? So you just have to understand the risk reward of that trade. It really is almost like a pure play hedge on coronavirus and how bad or not bad it is. Because part of this trade is once we understand the answers to those two questions, we might determine that, hey, this thing is going to recover pretty quickly. The coronavirus is contained. We think China is going to be okay over the course of the next few weeks or the next month. If that happens, you're going to see me rush into potentially call options in Wynn, right? So again, I'm just waiting on information. I want to understand what to look for. I want to understand what to do based on the information as it's released. And so I'm either probably going to go, there's a good chance I'm going to go long or short Wynn based on what information I see over the next coming days to weeks.
Another question from Danny wanting to know, Chris, if you could rename the book that you mentioned earlier, or something Black Swan. That's Black Swan, Impact of Highly Improbable, right?
Yes, Black Swan by Nassim Taleb. It's kind of one of those go-to books that everyone in the financial industry reads. If you're in capital markets, if you're working for a hedge fund, it's like one of the 10 or 15 books when you're a junior analyst that you'd be forced to read. It's a fantastic book because it really just broadens your perspective of what could happen and what does happen, and how assets are priced in financial markets and how they're underpriced for black swan events. Whatever the next black swan event is to happen. And 2008 was a black swan event, right? When the next one will be, we don't know, but it is a guarantee that it will happen. And the market tends to underappreciate black swan events. The market tends to believe that they won't happen, and it doesn't price them. So often the pricing of these options are not reflecting the possibility of a black swan event. So guys, if we were to estimate what do we think is the likelihood that this virus is going to be really bad, that's going to send world financial markets into turmoil? Is it 5%, 15% maybe? I don't know. I would say somewhere between 5 and 15%.
I would say 5 or less.
Yeah, maybe it's 5. Maybe it's 5 or less. But if it is, let's say 5%, that's actually a pretty high percentage rate when you think about the consequences and the type of money you would make off of a hedge. And when you have companies that would potentially fall 30, 40%, right? So Black Swan's a book you should read. Also, follow Nassim Taleb on Twitter. He's hilarious to follow. Tell him you heard about him through Dumb Money. And
he's got another book, Fooled by Randomness, that I think is a little bit more approachable and teaches the same concept. And maybe a few more concepts that are good too.
Yeah, great book as well.
Yeah.
How do I not follow him on Twitter already? That's amazing.
He's a character.
I'm following him now.
No, we don't invest in Bitcoin for no reason. I wouldn't say we're long or short Bitcoin. It just falls outside of our expertise, and we happen to have expertise in things, in areas that others tend to lack expertise. So we don't want to get caught up in in the world of the 5 million people focusing on Bitcoin, because there's plenty of people focused on that market. I don't know what we could bring to the table that other people haven't already brought to the table on Bitcoin. Anti-Fragile, good book.
The two questions that you are looking for updates on. Kind of near the beginning, you were talking about things that we need to know before we can really make informed decisions on how to hedge our portfolios.
Yes. So the way I see it, the two things I'm focused on, one is whether or not coronavirus can be transmitted during the incubation window before someone starts to show symptoms. The incubation window is 10 days, can be as long as 14 days.
Window, right? This is
very long incubation window.
Most, and it's that question as to whether or not those people who have had it for 10 days are actually infecting others, because we won't know that for a while.
Yeah, and that question, that answer to that question could determine right there how big of a deal this thing is.
Although in reality, hasn't this been a thing since December? Hasn't China basically known about this, and it's just now coming out because
so I actually read
it's now hitting the media.
Yeah, I was reading an article about this. So the information's kind of been coming out in stages, but the first place it came out, there's an AI company that reads foreign language news, and they actually came out with a warning. It was a Canadian company, and they warned Canadian travelers as early as December 29th about traveling to China.
Yeah, they've known about it since December day, but and there's all these conspiracy theories about where it started, in the fish market or in the lab, right? But it started really small. So the numbers were so small, right? And when it started off, that and the degree to which they're sharing that information with us about it, can you trust China that they would even share that? Listen, the bottom line is no one has come out from what I've seen anywhere and definitively said that you either can or cannot transmit the virus prior to showing symptoms. That is still an open question. The other question is the rate of transmission or infection. If it's between 1 and 2 or between 2 and 3, common flu is at 1.2. So if you see a rate of infection above 2, meaning that for every person that gets the infection, they're going to transmit to 2 other people, that is like a worst case scenario that hasn't been seen since the Spanish flu. So that's the other big question that needs to be answered that has not been answered. Scientists have theories on what it is, but I don't have comfort in any of the analysis that I've read to date on that.
Yeah, I've read everywhere from like 1.5 all the way up to 5.5, which is a huge range. FYI,
it'd be insane if that were true.
Yeah, the measles is like 12 to 14.
Yeah, and notice that we're not talking about death rate here. I mean, listen, the death rate is like supposedly the terminal rate is 3%-ish. That can go up to 5 or 6%, and that would be bad. But I don't think that is the driving factor of what is going to drive massive fear in terms of just contagion. It's high enough at 3% that you can see a worst case scenario if it can be transmitted prior to showing symptoms, and if the transmission rate is anywhere close to 2, which would be just horrific. Let's hope the answer to both those questions is a big no, and then we can all focus on all the stocks that have been beaten down a little bit that we can pick up at a slight discount. Like, that is the best case scenario. The worst case scenario is to hedge your portfolio, try to protect it. That's what I'm doing, right? Not for you, for people that want to do that. That's what I'm doing. And if I'm in a situation where my portfolio does get hedged and I come out of this better than the rest of the world, I hope I'm in a position to make a very large donation to people that are on the ground, whether here or in China or anywhere else, that are trying to help people in need. Because could you think of anything worse than a virus like this? This is so frightening. And by the way, I saw a tweet last night, like 2 in the morning when I was doing my research, of a group of like 150 nurses that were on their way to the epicenter of the virus that were all healthy just to help. I mean, those were heroes. Like, don't forget about this. Like, there are people out there that are sacrificing their entire life to help people.
And just a comment here. this flu season, I haven't fact checked this, but this flu season, there have been 15 million infected with the flu and 8,200 deaths in the U.S. I didn't fact check that, but I did research earlier, and there were 34,000 deaths in the U.S. from the flu. So just for some perspective, to me, this is a big crisis, but it's being a little bit blown out of proportion, and I'm hoping that it doesn't kill our stocks and that it actually opens up some buying opportunities.
Well, I understand something though. Understand something, and that is correct. From what I understand, but the death rate of the flu is nowhere near 3%. It's like I'm not positive about this. I did some calculations myself. I think it's less than 1/10 of 1%. Okay, so the concept here is if this flu that has a 3% death rate, right, and can be if it were to be transmitted without showing symptoms, it would have potential to be as large as a normal flu with a death rate that is maybe 30 times more severe than the normal flu. So yes, while it's terrible that we lose thousands of tens of thousands a year to the flu, and again, it's a huge if, right? This, without proper quarantining, could kill hundreds of thousands of people to millions right here. So that is really the concern and what causes the hysteria that circulates around these types of pandemics, and why this would potentially impact financial markets, which is what our show is about, right? Because at the end of the day, we're not physicians, right? We can't help people, but what we can do is at least educate and have some good conversation around what to look for and how we're thinking about protecting our portfolios. And that hopefully will just kind of, maybe light some kind of thoughts in your head about what you want to do with your portfolio. And maybe if nothing else, give you things to talk about with your financial advisor, and, spark some creative thinking.
Any other comments that we want to talk about?
And I got to leave like right now to get my hair cut. As you can tell, with little hair I have left, I have to keep it short. So
we'll wrap up right at
I have to leave.
5 minutes before the hour. Or are we just done now?
By the way, we should talk about. Do you want to just kind of talk a little bit about what we have coming up on Dumb Money this next month? Dude, we have some awesome stuff, right? We had a whole day of taping yesterday.
Stuff, and actually, we have an episode that was going to air today, but we decided to push it back so that we could have this live episode. But our next episode. Guys, what days do you want to actually?
Can I just pique interest with what we're talking about in the next couple episodes?
Yes.
All right. Coin rolling. The concept, and this took us in a direction we never envisioned it would take us, but we are going in deep to the concept of going to your bank, getting rolls of $50 and filtering out the silver coins for profit. People do this. We thought it was a joke. We actually discovered something really interesting when it comes to coin rolling. You do not want to miss that episode. A few different episodes we'll have on coin rolling. And then also we've met some awesome entrepreneurs here in Dallas. We met with one yesterday. This girl that you're just not going to believe her story in the company she's starting. And it looks like we're investing in it, right, guys? So this is all coming this next month on Dumb Money. Make sure to subscribe and hit that bell so you get the notifications. We're excited to share what's going on in our kind of investing life with you guys this month.
What day? So we used to be on a really tight schedule of publishing a new episode every Tuesday. Let us know in the comments if that is a good schedule, if we should try to, just put them out as fast as possible, even if it means doing it on a Wednesday or Thursday, or we're here for you. We're here to entertain and educate, and let us know what you would like to see. And
what kind of things do you like? Do you like it when we talk about public securities like this, or do you like it when we meet up with startups and find out, what kind of new business ventures there are out there? Or
do you want us to research all these side hustles like coin rolling, which we've had a lot of requests for, like stuff like that? I mean, that takes virtually no money to get started. You don't have to have money to get started doing it, right? And by the way, that's how we got started, right? We didn't have money when we started off. We were side hustling all types of ways to make money in our earlier days.
We should do a whole episode talking about our early money-making opportunities, like the things that we used to do for money. Chris used to detail cars. I
Garage
used to do
sales.
magic shows.
Yeah, no, we learned something about that this weekend. Dave the magician.
I was
Awesome.
very young.
Oh, Jordan just used to code for random people.
Well, that's how we met him. He was like a high school kid, and no.
Paid for my beer in college.
Yeah.
Yeah.
All right, guys. I
So we
seriously
want
do
to
need
talk
a
about our
haircut.
next episode that's coming up this week, though, because it's actually really this is the opportunity for us to once again start a company. We've said that we don't want to start another company, but we've decided that we just might do it. And this next episode is kind of our first step in kind of doing some market research and testing. And we actually put together our own focus group. So it was very educational for us, and I think it turned out to be a really good episode.
Yeah, and I think the public stock stuff, someone's saying they want to see more on public stock. Some people will say they want to see more on startups. I think we should do these live episodes. Like we have trading ideas every week, and we don't act on a lot of them, right? Obviously, but we can at least get on once a week, go live, and just talk about what we're looking at in the markets, what earnings are coming out that week, what our feelings are on them. I have, at any point in time, 10 to 20 trades I'm evaluating. I rarely pull the trigger on any of them. But we
We should
can
pick
discuss
one day
that.
every week and just do a public stock. Or if there's news, we should just jump in and do one. But I feel like because we try to make our show really entertaining and highly edited and all of that, the turnaround for a public stock is
It's too long. It's
sometimes
too long.
too
So we just
slow.
need to do this stuff
Makes
live.
sense.
Yeah, we
Yeah.
got to do it live. Hey, Gabe, and
You have to
we'll,
go.
I sorry, you guys can stay. I got to get a haircut. Hey,
No, we're gonna sign off. Thank you guys so much for watching. We will be back with another live episode as soon as we can. Chris is literally turning his camera off right now. I'm just trying to find the button to push so that we can end this show, and I found it. Thanks so much for watching. We're Dumb Money. We'll see you next time.